Bonjour, hello, 大家好. My name is James Grigsby. I am Senior Vice President for Getchee Inc. We are a location intelligence and market mapping provider focusing on the China retail market. It is my sincere pleasure to be here today with such a distinguished panel of China experts who have come. Many of them have come from China, but certainly other countries as well, to share their knowledge about the China market, to help us all understand a little bit more about the amazing market that China is from a retail perspective. Just to give you some headline numbers, many of them you might know, but the retail sales in China continues to be quite amazing. This year, sales are expected to top $3 trillion in retail sales, and within the next couple years will probably be the largest in the world from a retail sales perspective. There are, of course, some challenges and some interesting facets to retail development in China, one of which is online sales. Hopefully we'll have a little bit of a conversation today about the impact of online sales, but some of you may have recently noticed the Shuangshi, the Singles Day, so-called Singles Day in China, where Alibaba's Tmall and Taobao did more than $9 billion in sales in one day, which is an amazing figure. So, of course, there are many challenges, so I think that we will hear about some of those challenges today and learn how some of these companies are facing them. Let me go ahead and quickly run through an introduction of our panel, and then after I introduce each of them, we will then ask, starting on my left here, we'll ask each panelist to give us, to speak for 4 or 5 minutes on their experience in the China market. If you would please hold your questions until each of the panelists has made the presentation, then hopefully we can have a good discussion session. So let's go ahead and make some introductions here. First, we have on my immediate left, we have Mr. Luca Bastagli Ferrari, who is CEO of Arcoretail from Italy. Then we have Mr. Hao Wen, who is Deputy General Manager of Wanda Commercial from China. Next, we have Mr. Amir Kremer, VP International Development for Dairy Queen from the USA. Next, we have Mr. Joe Magrath. He is Director of Development for China for TIAA Henderson Real Estate, also all the way from Shanghai. And then finally, we have Mr. Christian Recalcati, Managing Director of Larry Smith, Italy. And then Ms. Lucy Wu, who's Secretary General and International Director of the China Chain Store and Franchise Association. So thank you all for coming. I will now give the microphone over to Mr. Ferrari.
Thank you very much, James. It's a pleasure to be here, and it's a pleasure to talk with all the other colleagues and panelists about China. The last time it was in Shanghai, you remember, James? And we met there, and we started working also there, because he is a person helping us doing our job in China. So it's good company, good company. So I present a little bit my company, just 3 minutes. I have to try to give you our experience in China. My company is Alcotecnica Group, and it's more than 2.5 years that we are engaged in developing project in China. And I can say that I learned a lot of things about China from my partner, that is Wanda Group, Xing Xing Katai. It's a state company that used to say that the important things in China is innovation and development. And with this criteria, we started to do our job there as an European company, as an Italian company. We started to understand the market. And I didn't want to spend my time to present you our project. It's a huge, a big project under the name Jiwa Park. We are at the Riviera. Who wants information? We are there. We are on the catalog. What I would like to tell you is what is China. Because we used to discuss along about China, but I realized that they read a lot of numbers about China, but sometimes the people didn't understand what it is. China is really a big country, but with a very easy philosophy, especially for us, for an Italian. And I think that it's nice to see that we have two Italians here discussing about China, because for an Italian to understand China is not so difficult. It's like to see what's happened in Europe, especially in Italy, in 1960. China now is exactly the same country, but more than 100 times bigger than what it was Italy during this period. The first things that the Chinese people wanted now is to have a house. The second one is to give instruction to his daughter and son. The third one is the big value of family, the parents. After they would like to buy a car, after they would like to go around China to discover this fantastic country. That means that I have a picture that is fantastic. I think that everybody knows the movie Vacanze Romane with the Vespa, and with during this period in Italy, there are the family that is going on the motorbicycle, going around Italy to discover Italy. So China now is the same things. In the panelists, there are people that is open more than 100, like Wanda shopping center in 10 years. This because it's really developing a market. But this market is completely different from our market because it's running as speedy as a baby that burns today, in 3 months, go to the school, in 1 year, go to the university, and in 3 years, get married and grow again another family. This is China. So China is a place where we have to study the market every day because it's innovation and developing. Every day is changing the market, and I can assure you that we cannot work in China if we didn't decide to invest a lot of money there. Only the company that go in China, invest money, open office there, and try to understand the market for what it is, can work there. I don't like when I, just 1 minute, I have 1 minute again. Okay. I don't like when there are people that say, oh, we go to China and we go there and we can sell whatever we want and there are no problem, it's an easy market. No, you lose money. A lot of brands lose money in China. What James said that is growing the market is right, but I can assure you that there are a lot of brands that close shops in China in the last 5 years. That go there, that choose not the correct partner, and they close shops. One example, an Italian company. The name is Robe di Kappa. They opened more than 450 shops. And last month, they closed 380 shops. So that means that there was space, but it's not easy to work there. And the number is huge, but we have to really consider the number. Everybody is talking during this exhibition that for the luxury brand, the Chinese market is fantastic for the consumer, that they are coming in Paris, in Milano, in New York, and they are buying. During the last exhibition here in Cannes, at the travel retail, they say something that is important. Just that 12% of the population of China have the passport. But during the last big holiday, the Golden Week in China, more than 380 million persons make 3 days holiday. 380 million persons, 3-day holiday. Means that like the population of USA that decided to go in holiday for 3 days. And they spend average 3,000 renminbi each. So can you consider what is now in China the domestic tourism? Have a turnover much bigger than what is the shopping. Because for the next 10 years, the Chinese want to discover his country because it's a fantastic country with a big tradition and a big history. On this base, we study our project in China. That is a touristic destination center. And this is one example. To go in China with innovation. We are not doing a shopping center. We are not doing an entertainment park. We are doing a place where the people can enjoy. Out from the city. It's not an outlet. It's a full price. It's a travel retail in terms of specifically kind of business that we are doing there. And is really an innovation for to developing a market. I hope that I stay in my time. Thank you, James.
Thank you, Luca. Next, Mr. Hao Wen, please give us the view from Wanda and what the future looks like for shopping mall development in China.
Thank you, James. Bonjour, mesdames et messieurs. And first, I think before my speech, I will give you 2 minutes video show about Wanda. And the reason is, after this video, you will see why Wanda doing like this, and how big it is, and how we grow, what business we do, and how we do success.
Deli and Wanda Group was founded in 1988 and currently operates in 4 major segments: commercial properties, luxury hotels, culture and tourism, and department stores. The company has total assets of $62.8 billion, $30.8 billion in annual revenue, and net profits of $2.1 billion in 2013. Wanda owns and operates 85 Wanda Plaza properties across China, including Beijing CBD, Shanghai Wujiaochang, Chengdu Jiniu, Wuhan Han Street, and Changsha Kaifu, occupying a total lettable area of 17.04 million square meters, ranking second in the world. Wanda is currently undergoing major expansion, with more than 50 Wanda Plazas currently under construction and 24 scheduled to open in 2014, such as Beijing Tongzhou and Kunming Xishan. By 2014, total lettable area is projected to reach 22.03 million square meters, making Wanda the world's largest real estate company. Wanda Plaza is the leading commercial property brand in China. Wanda Plazas are mixed-use developments that integrate shopping, dining, leisure, and entertainment functions into one urban complex. Wanda Plazas transform their surrounding environments, which is why Wanda Plaza is the heart of the city. International Wanda,
Thank you very much.
Centennial Business.
Actually, this video was made 6 months ago. And it's showing 85 opened Wanda Plaza, but this figure was not correct. Right now, we are opened 109 Wanda Plaza, and this year we are open 26. For the next 2 or 3 years, we'll be continually 25 to 30 Wanda Plaza open every year. This is definitely will not happen in Europe. This is only happen in China. Yeah, Wanda Plaza from building to operations is only 18 months to 24 months, because we have such tight control systems. You know, from the way we're getting the line, how we target our shopping mall, and how we do the operations. I think the main element to make Wanda Plaza success is that we are more focused on the operations. The reason why, because the people in China, they're coming to your shopping mall, they are looking for experience. Otherwise, they were hitting by the e-commerce. So that's why Wanda Plaza really focus on giving the people experience. For example, food experience. Chinese food, very, very famous in the world. And then when we do the restaurant allocations, we study of different cities have different taste. So this will bring a lot of traffic to our mall. And then we are targeting of huge supermarket. This is also can bring a lot of people to here. Because you're more success or not, it depends on the traffic, I think. If you don't have traffic, that immediately. So plus, Wanda is also the first, the biggest moving film line in the world. That 2 years ago, we are acquisition of AMC in United States. That is giving us 324 cinema in US. Plus, we had what we have right now, close to 200 cinema in China, all of in our Wanda Plaza and in other shopping mall as well. Because Chinese people like to watch the movies. And the way of their living is changed. So I think that's main elements that to make Wanda Plaza success as right now. So this, I think, is very important for us. And right now, Wanda Plaza are looking forward to expansion themselves, to go to overseas. That's why we're coming to Mapic for 2 times already. And then we're looking a lot of our old friends. You know, Wanda Plaza, we are cooperating right now, I think, close to 5,000 brands, retailers working with us. 40% are international brand, and the other 60% are domestic ones. These 40%, why they want to open the business with us? Because our modules. Our module will be, opening on time. This is very important for them, in China, because Wanda also have the best way to do the communication with them, and then after they experience 1 or 2 shops, they will follow with us, like Zara, H&M, this. I think they are opened more than 200 shops with us. Those will be in the traffic as well, and plus the Chinese elements like restaurants. I think this is very important. Yeah, I think I may a little bit earlier, so I will give some squeeze time to the gentleman next to me. Thank you, James.
Okay, maybe just go ahead.
All right. Hello, everybody. I got a quick 5 slide. Just to basically tell a little bit about Dairy Queen. We are an American brand and heritage brand in the US. We've been in business for 75 years. We are privately held by a very important financier, and we are part of a very large holding company called Berkshire Hathaway, which is managed by Warren Buffett. In the US, we have 2 concepts. We have the treat concept, because we started as an ice cream shop, and we also evolved into a grill and chill, which is a food platform, just like McDonald's or Burger King. In China, we only have the treat platform because we have been doing business in China for over 20 years. If you can see here, very quick about the development in China. We have now over 600 locations, but in this stage, we are opening about close to 100 stores every year now. And so we believe the market can really be very, very big for us. We are focusing about really giving the Chinese market experience. We are focused more about the young generation. We do very well in countries that are really embracing the family and friends habits. This is where we're doing very, very well, and this is why China is doing very well for us. But in China, you have to be very, very patient. We are an American company that belongs to a very patient company, and we found to our satisfactory very good partners in China, which are also very patient people, So when you start a new brand in China, especially it's an American company, we tend to be a little bit more aggressive in growth and try to conquer the world in one day, but you cannot do that sometimes in elsewhere, So we have to be really patient. We've been there, and only after 20 years, I think we can really master it and really take it to the next level. Some photos about our location in China, which are quite different than what we have in the US. We're looking a little bit more minimalistic looking, again, more skewed to the young crowds. We're a little bit skewed more females to male. In the US, we're a little bit more older crowd, but in China, in Asia, in total, we have more than 1,000 stores. We're a little bit more focused for the young crowds. We have different kind of products. We have products inside malls, and we have also street locations, ranging between 20 square meters to up to 100 square meters on an average. You can see here some kiosks with experience. Most of our is really developed between malls, but also we are very eager to be in the street level. We had to do a lot of innovation in China, especially in products. We had to create new flavors. We had to look at the portion size. As you can imagine, portion size in the US are nothing to do with the portion size in China. So all these things, if you are an American brand coming to China, you have to really look at everything and be prepared to diversify, be prepared for innovation, but maintain the DNA of the brand. You cannot let go of the DNA of the brand. At the end of the day, you are what you are. You can be something which you are not. But I think there is a fine line between innovation and heritage, which I think we were able to master over years. Some more photos, for example, green tea, okay? It's an interesting flavor. We don't have it in the US, but you have to have it in China. So we have a Blizzard green tea, which is an ice cream flavor with iced tea, which is not very common around the world. Basically, that's it.
Thanks.
Thank you, Amir. Joe, give us the perspective from a development investor company in China.
Sure, thanks. I represent TIAA Henderson Real Estate in their China operations, and we are currently moving into the luxury retail outlet scene in China, quite an aggressive pace. So my slides today will be covering retail in China from an outlet perspective. So I think I'm actually going to take to the podium just to run through. Is that working? Great. So I wanted to cover off on how luxury designer retail outlets have been proving to be a recipe for success for retail in China. Of course, I think we're all familiar with luxury outlet developments across Europe, but for China, this is a fairly new market, and we see a lot of players coming into that market on the back of opportunities that we're seeing there. One of the benefits of retail outlets is that they have an enduring strength in terms of performance. Outlets have been proven to thrive during economic downturns, and that applies to both Europe and as well to the Asia market. They're fairly immune to market swings, and as our own research has shown, we've experienced the same thus far in the life of our European outlet mall fund, whereby we've had steady performance for all of our outlets over here, hence the interest in expanding our reach into outlets in China. Outlets are one of the strongest performing real estate sectors in Europe, and they are, I think, as anybody in the industry knows, very, very strongly supported by visiting Chinese consumers. Go to any outlet throughout Europe and you are bound to come across a fairly sizable contingent of Chinese tourists who are visiting these centers. Previously in China, though, outlets have been a foreign retail concept and an undiscovered investment opportunity. But they're now being recognized, and they're being built out across China by some of the various players that we all know here in Europe. The competition is most certainly heating up as a lot of foreign owners and investors are moving into the market there. And so you see the outlet sector is starting to quickly mature in China. The middle classes have continued to swell. Their demand for international luxury retail goods continues to grow. This effectively new form of retail for China is really starting to satiate the Chinese desire for all things foreign and worldly without the Chinese actually having to leave China. The outlets that are being provided in China give an opportunity for Chinese to get access to luxury goods at discounted prices without having to go abroad for that. So the benefits of niche, this form of retail, which is effectively still considered niche in China's current economic climate, well, historically outlets are a niche offer, but they are fast becoming a recognized retail alternative in the Chinese eye. Consumers are being more readily drawn to outlets. They understand what the concepts are about. They've had enormous exposure to outlets in Europe through a lot of international tourism. And so people are quickly becoming much more familiar with the concept. What we've seen is that they can take on a very unique and a profitable investment profile in China. This has further driven a lot of investment interest in the last few years in the sector over there. Outlets provide a great combination of low density, large scale out of town locations as their fundamentals. They have reduced land costs, low building costs, and with increased domestic brand recognition in China, they present a great opportunity for strong rental growth for landlords and owners. They provide discounted luxury goods at pricing which is hugely attractive to the Chinese middle classes and their aspirations, not just for high net worth individuals in China. They take advantage of perceived value for money, and as many people have seen in headlines, they also manage to avoid the stigma of expensive gifting, which has been subject to a fair amount of discouragement within the ranks of the Chinese authority of late. And lastly, they tend to satisfy the Chinese domestic tourism demand in that they're a unique experience for people to come and take part in relation to tourism. And so we look at the attractiveness of China's outlets. As an investment platform, outlets are effectively defensive in nature, and as I said, they perform very well in cyclical downturns. They are a low volatility investment. We've seen that high quality assets have proven to outperform. Leasing covenants have been shown to improve as the extent of brands flourish in China. Managers have been able to successfully drive performance in outlets in China through marketing and asset management measures, and there's growing retailer demand and limited supply, which again supports heavy rental growth. As with outlets elsewhere, we found that this experience is difficult to replicate online, and I know there's a lot of discussion about how outlets could suffer from e-commerce and those channels for retail. Despite a massive Chinese interest, I think as everyone understands, in e-retailing, outlets have still proven to be very, very successful. And this is largely as a result of the inability to replicate the experience of visiting a retail luxury outlet online. As a strategic and global retail expansion opportunity, especially if you're a retailer, China's outlets provide a substantial footfall. We had in our Beijing outlet alone so far this year close to 4 million visitors coming through the center, which is fairly substantial. You get competitive global sales densities. Entry costs are quite low for tenants. Rent is generally considered affordable, especially in relation to high street retail. You get a very reputable channel for surplus stock disposal, which for a lot of retailers is a concern in China, that their product isn't ending up in the wrong places and making its way into the market in inappropriate ways. There's a good ability for brand positioning and association with like brands in high quality retail centers. Generally speaking, the outlets are able to secure tenancies that all have a very close relationship in terms of how they position themselves. And that opportunity doesn't exist in many places in China. The outlets can capitalize on a very low amount of per capita outlet space that we currently see in China. If we look at the attractiveness of China outlets to the Chinese shopper, well, they offer the best available price for international luxury goods, quite simply. They provide a much wider range of brands in one location. They provide a very unique shopping experience which many of the Chinese are not necessarily used to enjoying, which provides a real sense of place. As with elsewhere, F&B and entertainment has been slowly working its way into outlets as well, with extended dwell times on the back of that. And importantly in China, a lot of the newest schemes, which are designed to very, very high quality, they provide a very reliable, a safe, and a clean shopping experience, which isn't always the case for other retail developments in the country. All of this negates the need for expensive overseas travel for Chinese and the difficult visa logistics, which some of us here may not appreciate, for the Chinese to have to go abroad in order to get access to discounted luxury goods. And so we now look to how quickly China has evolved through this sector. And very differently to what we've seen in the West in terms of how outlets have evolved, China has moved immediately to the forefront. They have skipped past 25 years of outlet evolution that we've seen in the West to provide design standards, implementation standards, operational standards, and tenancy standards that are literally at the forefront of global outlet development. Some of the latest outlets in China are cutting edge. They're absolutely cutting edge. And if you compare them to Europe, in many instances, you would find that they are outclassing some of the assets that you can find here. China's highest quality outlets, they're quickly establishing themselves as key tourism, retail, and urban day trip destinations. The Chinese, as you can imagine, in the middle classes are quickly becoming a car culture. I think as we touched on earlier, that's one of the primary demands from Chinese is to have car ownership. The outlet schemes in China very much play into the opportunity to make use of car ownership and to also satisfy some of their short-term tourism demands. There's a growing number of international operators now that we find in China, all of them offering quite attractive turnovers, a reliable management and a leasing interface, and as you'll see later, a number of world-class design environments through international design work that's been going on for some of the outlets over there. In combination with a lot of infrastructural investment that the government has been putting in place all across the country, I'm sure you're all aware of the high-speed rail networks which have proliferated throughout all of China, amazing amounts of highway and road infrastructure and various urban infrastructure projects. All of this is enabling quite a large-scale mobilization of the Chinese public across the country, which all helps to support patronage at the various outlets that you can now find. And so all of this has really resulted in the establishment of new outlet standards, which are being played out all across China. Demonstrated here in some of these images, you can see these are photos from our very successful Florentia Village scheme, which is we have a platform of outlets under this scheme which are being built out across China. These photos come from our scheme outside of Beijing, which was originally opened about 3 years ago. Recently expanded into a third phase after enormous success of the first two and reaching close to 50,000 square meters of GFA now. You can see the architecture is very much derived from authentic Italian architectural design. The Chinese are very, very receptive to it, and we believe it's a solid platform for continued expansion of this platform into other cities in China. So that's going to wrap it up for me. I've got, at the end of this panel session, if anybody is interested to stay behind, we also have a video which runs through the development of these luxury outlets across China. It gives you a bit of insight into what our pipeline plans are and where it's all headed.
Thank you, Joe. Christian, over to you.
Good afternoon, ladies and gentlemen. I would like to start from scratch. I would like to start from the title of our conference, which is Growth Opportunities for International Retailers. And I would like to put myself in an expansion manager's shoes that has to convince its board to expand in China. So the first thing that he or she does is to set up some statements, a basic statement, to convince the board. The first is that there is nowhere any growing economy such as China, everywhere in the world. basically, the population that you can find is massive. It's true that there is not a real balance between rural areas and main cities. The urbanization is very, very rapid, sometimes and somewhere too rapid. And urbanization must bring services, must bring facilities, must bring retail, so must bring opportunity. It's an economy where the middle class is constantly growing. Chinese are more and more traveling abroad. So for a brand, it's easier now to be known by some Chinese. So when you arrive in China, you could not be just a newcomer and unknown. China is or must slightly switching from an investment-led growth country to a consumption-led growth country, because this is the future. They cannot rely anymore, or it's better to say it could be quite risky to keep on relying on just exporting goods. It's quite easy from an expansion point of view to reach economies of scale, because in the short, medium terms, you have plenty of opportunities and you can catch them. It's a quite mature market in terms of format. Luca mentioned that there is a new format, a new innovative format that is coming into the market. So you have shopping mall, as you have an opportunity in street retail, you have urban malls, you have factory outlets, and some retail parks are coming to the light. Then, it's very important and very modern. There is a huge room for omnichanneling. Alibaba teach everything. You mentioned November 11, what happened. I think 9 times then the Crazy Friday income in the US. It's true that one thing is to be a part of, one thing is to have your goods on Alibaba, and one thing is to create your online store. Then you will have to face a lot of difficulties. Just basically, one is the fact that not all the major credit cards are accepted in China. Then it could be quite difficult to buy with a Visa sometimes. And these are the main statements that could convince, in principle, a board. But as always happens, in the board there is always somebody that knows something more than you and raise its points. Which points? Let's start considering that Tier 1 and Tier 2 cities are quite oversupplied, or there is a risk of oversupply, especially in what we call the top location. Or I know that downtowns is a concept that is not so adaptable to Chinese big cities, but the new developments are happening in the outskirts of the town. Almost all major shopping centers start looking the same. Same brands, same retailers, same format, same concept, luxury goods at ground level, then premium goods at the upper level, then some Chinese retailers, then you have restaurants, and sometimes leisure. There is a sort of lack in positioning a shopping center, shopping mall, whatever you want. There is a need for a downscaling in the Chinese market. Everybody knows that the Chinese government is now trying to avoid those huge amount of gifts that were bought in the top luxury shops everywhere. And another important point is that the Chinese retailers are improving their quality, both in terms of goods and in terms of format. That is to say, if you want to go to China, be aware that your competition will not be the same brands that you find in Europe, but you will find a lot of competitors in the Chinese market. And this is very important and cannot be underestimated. Another crucial point is that in China you have plenty of development on paper, real, I don't know yet. But especially when you deal with local developer, it's very hard to find a long-term vision. It's closer to take the money and run than have a shopping center that will be well maintained and that will overcome all the problems that you can have during the life cycle of shopping centers. And this is quite related. Another problem is that the property/asset management activities is fundamental, especially in some markets that are very saturated. And there is a short in supply of these activities. And last but not least is the background of the developer, that sometimes is more important than the effective location. This is basically to say that I'm 100% sure that there are plenty of opportunities in China, that China is the market to be now, but at the same time, if you just underestimate a small issue, you could have great risk. You can grow very, very fast, but you can get down at the same speed. I totally agree with Luca. There are plenty of examples. He was very polite, just mentioning one of them. It's Italian, unfortunately, but you know. So no more Chinese. I always suggest to find the local partners, to approach a market like China not with a Western mentality, because you are dramatically lost. I don't want to steal time to Lucy and to further question. These are some projects we are now working on. For that, I ask you to pay a visit to our stand later on. Thank you very much.
Thank you, Christian. And finally, certainly last but not least, we have Ms. Lucy Wu, Secretary General, International Director of the China Store and Franchise Association. And I think Lucy will share with us the results of a very interesting survey that was just completed on shopping center development and chain brand expansion. Lucy?
Yes. I'm very happy to be here. Later is not always first. I'm lost here. But at first, I should appreciate the invitation from MAPIC, from Nestlé, to invite me to involve this presentation, this summit. And thank you very much, every gentleman from Italy, from America, to introduce, to share your experience about China market. I want to take this opportunity to share some the current situation about China retail market. Maybe just as everybody mentioned, China is, the retail market is booming, yeah. But not every niche sector as good as people hope. For instance, currently, yes, department store has not been very good, not only for the sales, but also for the traffic. We can find a lot of department stores in the Tier 1 or the Tier 2 cities. There are not very much customers, shoppers, to visit, to shop at the department stores. So it's very, very challenging for the department store sectors. And since last year, the hypermarket also have met the big challenges. The fast-moving consumer goods retailers now are considering how to transform. About 2 weeks ago, our association, China Chain Store and Franchise Association, had the annual conference and the big show in Fuzhou, the capital city of Fujian province. The China Shop Show and the China Retail Congress is the biggest one in China mainland. The themes of this Congress is to smart retail and embrace the new consumption area. Because the different performance of the different sectors, we have made a research. We found some sectors are very hot, but a few. Most of the sectors not good. Yeah, just as I mentioned, the department stores, hypermarket not good, but the e-tailer, the omni-channel, and the specific stores, the fashion, especially fast fashion stores, are going very well in current years. And according to our survey and the report from the other resources, specialty stores include fashion, accessories, cosmetics, and something like that will go up in the next years. And for the food and the beverage, as you know, our central government anti-corruption policy influenced the luxury, very high-level restaurants. So now, a lot of new concept restaurants, we call the light luxury restaurant and lifestyle restaurant and coffee bars, tea house, and something like that. The lifestyles are very, very good performance, not only in the Wanda's shopping malls, but also in all over China, especially in the first and second tier cities. Yeah. It's just I gave the very, very general situation, the picture to you for your reference. If you want to come to China, please don't recognize every city just like Shanghai. Shanghai is very international, very, very commercial. In China, every region has every region's history and culture and habits. Between Beijing and China, I think they are different, not only from your view, but also from the Chinese local people. They are totally different. So please, if you want into China, please, I think at least you should go to China to visit at least 3 times. Yeah. Yes. About our survey, I think the time is too limited. I'm very happy to share our survey. The survey we conducted with Deloitte. It's the 3rd year for us to do, and we will release the findings, officially findings, in the middle of December. And if you want, please contact me or visit our website. We will let you know the new findings. Thank you. Thank you, everybody.
Thank you. Thank you. Thank you very much, Lucy. I think we did run out of time. We might be able to squeeze in just one question. I think we have time for just one question. Is there somebody from the audience who would like to ask a question? Sorry. Guess we covered all the bases then. Well, did I see something? Okay. Well, certainly, I think the panel will be here for a few more minutes if you have some questions to come up and ask each of them individually. As I said, they have, and as you can tell today, they have a wonderful breadth of experience in the market. So with that, we'll leave it there. As Lucy said, I do encourage all of you to come visit China, have a look around, and learn much more about that fascinating country. So thank you very much, and 谢谢你们. Bye-bye.